Im Jahr 2026 wie die Top 1% zu investieren, bedeutet, der Zeit voraus zu sein und Strategien zu verfolgen, die sich schnell verändernde Finanzlandschaft widerspiegeln. Diese Elitegruppe legt den Fokus auf Diversifikation und erweitert ihre Portfolios international, um Wachstum in aufstrebenden Märkten wie Indien und Indonesien zu nutzen. Sie priorisieren auch nachhaltige und ESG-Investitionen, da sie die zunehmende Bedeutung von Umwelt- und Sozialverantwortung erkennen. Durch den Einsatz von Technologie, einschließlich KI-gesteuerter Tools und die Suche nach alternativen Anlagen wie Private Equity und Immobilien positionieren sich diese Investoren für Widerstandsfähigkeit und langfristigen Erfolg. Die Anpassung an diese neuen Trends ist für jeden, der in den kommenden Jahren finanzielles Wachstum erzielen möchte, unerlässlich.
Diversifying investments across international markets is increasingly vital for reducing risk and capturing growth opportunities. Emerging economies, such as India and Indonesia, have recently outperformed developed nations, offering investors the potential for higher returns. By expanding portfolios beyond local borders, investors can mitigate the impact of regional downturns and benefit from dynamic, fast-growing sectors abroad. This global approach not only strengthens overall portfolio resilience, but also positions investors to take advantage of shifting economic trends. As the financial landscape evolves, international diversification remains a key strategy for forward-thinking investors. Sustainable and ESG investing has become a defining trend among high-net-worth individuals, with a particular surge in interest from millennials and Gen Z. These investors are increasingly prioritizing companies that demonstrate strong commitments to environmental responsibility, social impact, and ethical governance. As a result, assets managed in ESG-focused funds are projected to reach $50 trillion by 2030, reflecting the growing demand for responsible investment options. This shift not only aligns portfolios with personal values, but also positions investors to benefit from long-term growth opportunities in sectors driving positive change. Alternative investments are playing an increasingly important role in modern portfolios, especially among high-net-worth individuals seeking higher returns and greater diversification. Private equity and venture capital offer access to innovative companies and emerging sectors that are often unavailable through traditional stock markets. Infrastructure investments, such as transportation and energy projects, provide stability and long-term growth potential. By incorporating these asset classes, investors can reduce exposure to market volatility and unlock new opportunities for wealth creation. This strategic shift reflects a broader trend towards more sophisticated and resilient investment approaches. Technology and artificial intelligence are revolutionizing the way investment strategies are developed and executed. By harnessing advanced algorithms and automation, investors can analyze vast amounts of data in real time, identifying market trends and opportunities that were previously difficult to spot. AI-driven tools are now widely used to optimize portfolio management, reduce human error, and enhance decision-making. This shift allows investors to respond swiftly to changing market conditions and maintain a competitive edge. As a result, technology continues to play a pivotal role in shaping the future of investing. Personalized wealth management has become a cornerstone for high-net-worth individuals seeking to navigate increasingly complex financial landscapes. Services such as estate planning and family office management are tailored to address unique needs, ensuring assets are protected and efficiently transferred across generations. This approach not only helps preserve wealth, but also supports long-term family legacies. By leveraging specialized expertise, investors can manage trusts, succession planning, and philanthropic endeavors with greater confidence. As generational wealth transfer accelerates, the demand for customized financial solutions continues to grow. Real estate continues to stand out as a reliable investment choice, especially among affluent individuals. Many high net worth investors are actively expanding their residential property portfolios, drawn by the stability and long-term value that real estate offers. Unlike more volatile asset classes, property investments often provide consistent returns and serve as a hedge against market fluctuations. This enduring appeal highlights why real estate remains a cornerstone in the wealth-building strategies of the top 1%. The Great Wealth Transfer is reshaping the financial landscape as younger generations inherit significant assets from their predecessors. This shift is driving new investment preferences, with millennials and Gen Z placing greater emphasis on sustainability, technology, and personalized financial solutions. As a result, financial advisors are adapting their services to meet evolving client expectations, offering tailored guidance and innovative strategies. The transfer of wealth is not only influencing portfolio choices, but also redefining the relationship between investors and their advisors. This generational change is expected to have lasting effects on the way wealth is managed and grown in the years ahead. By implementing these forward-thinking strategies, investors can mirror the approaches of the top 1% and set themselves up for sustained financial growth. Diversifying across borders, prioritizing sustainable investments, and leveraging technology are just a few ways to stay ahead in the evolving market landscape. Embracing alternative assets and personalized wealth management further enhances portfolio resilience. As generational shifts and global trends reshape the investment world, staying informed and adaptable is key. Thanks for watching, and don't forget to like, comment, and subscribe.